Hello everyone, this is Anil Kukreja from Dealmoney Research. Let's have a look at the commodities and currencies from a weekly perspective. In this episode of Commodity Weekly Watch, we are going to have a look at the bullions, that is, the gold and silver, natural gas from the energy sector, nickel from the base metals, and USD INR from the currency segment. So, beginning with bullion, gold and silver has continued its sideways to bearish bias from the previous week, as the markets are awaiting the stimulus package announcement from the new US government, that is, led by US President Joe Biden. Prices are also supported by the weak dollar index, which is currently at the lows of 92.21. Weakness in dollar index as has been seen a positive news for the bullions. So looking at the chart of the gold, prices have sustained at the trading range of 49,350 to 52,250 levels, while the momentum indicator RSI is at the level of 46, which is supportive of the sideways bias. However, an immediate support would be at the level of 49,300, while an immediate resistance would be at the level of 50,800, which is also a 30 days exponential moving average. However, if the prices breach the given support, the next support for the precious metals would be at the level of 47,900, which is the 200-day simple moving average. Moving on to the silver chart, silver prices have also sustained the trading range of the level of 60,500 to 66,000, while trading within an upward sloping channel. Prices are around the lower end of the channel with an immediate support of 61,800 and 60,500. With the RSI being at the level of 50, prices are supportive of the sideways bias. An immediate resistance for the silver would be at the level of 64,000. However, if the prices breach the given support, the next support would be at the level of 57,500 for the coming weeks. Overall, we expect the bullion sector to trade with a sideways bias for the coming week. Therefore, we expect the gold and silver to trade within the given range. Moving on to the energy sector, natural gas prices have been trading within a downward sloping channel. Prices are currently have bounced back from the lower end of the channel. Prices are currently maintaining the range of 197.50 to 220 levels. While the immediate support would be at 197.50, a buy on dip strategy would be preferable in natural gas, with the resistance at 213 level, which is the 30 days exponential moving average, which could be the initial target for the buy on dip strategy. Therefore, we expect the natural gas to trade with a buy for the current week. We can buy natural gas from the level of 204 with a stop loss below the level of 197 and for the target of 214 for the coming week. Moving on to the base metals. Nickel on daily chart has been moving within an upward sloping channel. Prices are currently at the resistance of this higher end of the channel, with a negative divergence with reference to price on the momentum indicator RSI. That is supportive of the bearish bias for the nickel in the coming week. Prices have currently the resistance of 1215 levels, with the support being at the level of 1160, which is the 30 days exponential moving average for the nickel. Therefore, we would recommend a sell on rise strategy for the nickel during the current week. We could sell nickel from the level of 1080 to 1090 levels with a stop loss above the level of 1210 and for the target of 1050 for the current week. Moving on to the currency segment. USD INR on the daily chart has been sustaining the resistance of a downward sloping trend line. Prices have retraced from this trend line. We expect the trend line not to be breached during the current week, as the prices have the resistance of the level of 74.75 with the support of 73.90 and 73.50. We recommend to sell on rise strategy for the USD INR for the current week. We could sell USD INR from the level of 74.40 to 74.50 levels with the stop loss above the level of 74.80 and for the target of 73.80 and 73.50 for the coming week. So that's all from my side. Have a nice day. Thank you.